Peter Eliades with you. This is Stock Market Cycles YouTube update for Monday, June 26th. Mea culpa, mea culpa, mea maxima culpa. Look it up in your Latin dictionary, okay? So I'm sure when anyone sees another Eliades Stock Market Cycles update, so, oh, I can't wait to hear how he's going to try and get out of this. What, is he still bearish? Is he still, has he finally admitted that we're in a bull market again, that we're going to do highs? Okay, let me tell you where I stand. So when I say mea culpa, have I made mistakes? You bet I have, knowing this business. Like they say, if you're a Christian, there's no one sinless in the world. Okay? It's the same way with market analysts. There was no one blameless in the world. No market analyst has called the market perfectly. I'd like to think I've had more than my share of great market calls, even though a lot of people look at me as being a perma bear. No one was more bullish than I was coming into the 70s and 1980s, several decades ago. Very, very bullish, okay? But since the 2000, give or take a decade or so, yes, I have been for the most part on the bearish side of the wagon because of several factors: longer term cycles, valuations, things like that. Valuations have very little, if anything, to do with market timing. But for me, cycles have everything to do with market timing. My big thing is cycle price projections. We're not going to touch that here. What I'm going to touch here is a couple of things I think that you will look at either with awe or say, oh, that's very interesting. But he's going to be wrong again. He's always bearish. We'll see. Okay, let's start with this. This has been an amazing trend line. It goes back to 2009. This is on a weekly chart. You can do it on a daily chart too. If you have one that you can see back to '09 into the present time zone, okay? But look at this incredible trend line from the '09 bottom. Came down to it again at this low in 2010. Finally broke below it. And from this break in the middle of 2011 to this point right here in 2020, 9 years, almost a full decade below this trend line. But notice how it stayed below, came up to it here, stopped it, came up to it here, 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 and here, all the way through 2013, 14, and 15, coming up to it, not being able to get above it. Came up to it again, January of 18, came up to it again in February of 20, came up to it again in August of 20, again backed off from it, and then finally, in what I would consider to be the blow off move to the upside of this great bull market from '09. And then we came back down below it, a little bit above it, further below it. And I was making a big thing over the past several months about this. We came up to it, got stopped. Came up to it, got stopped. Came up to it for a few weeks here. This was in mid to late April. And then finally, in the past few weeks, boom, look at this. So, what's the conclusion to draw? Well, the conclusion is there we are. We've broken above it. We're going back to new all time highs again. Well, if you look at this line alone, you can draw that conclusion. That is a possibility. But here's the way I thought. I saw this move after being stopped one, two, three, maybe 2.5 to 3 times right here, and finally a break above. And I said, there's something suspicious about this break right here, okay? I said, now remember, it's really amazing for a line like this to be so encapsulating over this long a period of time because it's a linear line. It's arithmetic. It's not logarithmic. It doesn't go by percentages. It goes by price alone. And so it was very unusual for it to be able to last this long. And finally, we got this what appeared to be a blowout above it right here. But here's the way I thought. I said, wait a minute. Let's take a look at the last couple of approaches to this line, which would be the 2018 high and the 2020 high, and let's look at it on a logarithmic chart. When did I come to that conclusion? Just in the past few weeks, when we had this apparent breakout to the upside. And let me show you what I found. I hope you find this interesting. I found it fascinating. Here are two of the points on that trend line, on that arithmetic linear trend line. The high in January of 18, the high in February of 20, but now we've turned this into a logarithmic chart where percentage moves in terms of up and down magnitudes are the same. In other words, if you go from here to here, this is the same percentage move as going from that equal magnitude on the chart. Let me confirm for you this chart. Okay. Customize, scaling, semi-log. They call it semi-log because the vertical scale is logarithmic. The linear scale, which is time, is a regular scale. There's nothing logarithmic about it. So it's semi-log because the numbers on the right are in logarithmic fashion. But look at this. Look at this. Okay, the points I just showed you are this point right here, January of 18 high, and this point right here, the February of 20 high. They're right on the so-called amazing trend line going back to '09, okay? The 18 high and the 20 high. Let's go back to them here and here. Now remember what happened here on the amazing trend line. We had this big blow off, boom, above here. But look what happened here. I mean, you could not have hit this June 16th of 2023 high any more perfectly. I think it was within 4 S&P points of an exact hit, okay? This trend line, 18 high, 20 high, and potential high in June of 2023. It's a little too early to call it an important high yet, but we're going to look at it in more detail now. I showed my subscribers this line the weekend when it occurred. I mean, that was the day right here, the very day that we hit this trend line, June 16th. On the weekend update, I showed them this trend line and said, we hit it virtually exactly on a log chart. Well, as it turns out, I have some good friends in the business and I wanted to show it to them. I was that excited. I was really excited about seeing something exacting as this. These two very important highs, and then being hit exactly on the day that I looked at it, okay, on June 16th. Mentioned it to a few friends, 3 or 4 technical friends of mine. One of them, his name is Robert McHugh. Bob McHugh has a service. I think it's technicalindicators.com. But if you're interested in following up on it, look for his name online, Robert McHugh. Simply do a Google search, stock market analyst. And I sent it to Robert. And he looked at it and he sent me back a note saying, that's interesting, very interesting. And then, perhaps much more importantly, a day or two later, he sent me a note and said, Peter, did you notice that if you go back on your trend line, that it goes virtually exactly to the low, the crash low in 1987? And I wrote back and said, no, I didn't, but you can be sure I'm going to look at that. And look at it, I did. Would you like to see what I found? Watch this. This is what I found. This is a thing of technical beauty, a wondrous thing. It's things like this that you want to gather people around, all these people that spend their lives trying to analyze the market and trying to look at the fundamentals and say, whoa, the Federal Reserve is going to do this, or oh, Putin's going to do this, or oh, that's going to happen here, and oh, all the things that they think affect the market. Okay, they think that if they know or can analyze those fundamentals correctly, that they will have a handle on the stock market. And I say, bullshit. Okay? This is the reality and the truth of the market. Look at this line. Now let's start pointing things out to you in this line. First of all, this is the 87 crash low on the S&P. I have these log numbers in here because I did this chart for my subscribers earlier today, and I wanted to show them the math or the trigonometry behind the whole thing, okay? These are the numbers on the S&P at the lows. This is the October crash low in the S&P, 216.46. This is the October of '02 low after this huge decline, 768.67. And the final number up here is the high that we saw on June 16th, just over a week ago. Okay. So the reason I have the logs on here is because, first of all, I don't trust TradeStation, although I will say that if you can contain the full time base of your logarithmic line, then it's accurate, okay? The moment you start zooming in and trying to look at lines a little more closely, and I'll show you what I mean. For example, notice that this is an exact hit on the '02 low right here. If I click on the line, it'll show you. Begin date, October 23rd. Remember, these are the week ending dates. October 23rd of '87. End date, October 11th of '02. Those are these exact two lows right here, okay? And then I just simply looked up the logarithm of those numbers. Once you have that, and you have the distance in weeks between these 2 points, then you can calculate exactly where the line would be at any point in time going out into the future. All you need to know is the number of weeks from either one of these anchor points to the date that you're pointing to, okay? So I did that. I did that with the week ending June 16th of 23. And so once you do that, when you determine the number of weeks, so either from this point or that point, then you determine the movement in the log number per week and then multiply it by the number of weeks, then you can know what the exact log number will be for the week ending June 16th, 2023. And as it turns out, this is the log number, 3.646099457. Okay? Then you just do an anti-log. The anti-log is the number that would correspond with this log. And that number is 4426.90. Do you know what the high was that week? The S&P? 4448.47. 20 points away from an exact hit. This is a line that goes back to 216 in the S&P in 1987. And I'm going to do a little zoom in here. It won't show you exactly what I'm looking for, but it will show you this. Okay, I actually drew this line in to correspond with where it took place. And so this is it. This would have been an exact hit right here. And this is the additional 20 points right here, okay? Incredible accuracy. Now, let's back off on this again and examine this line in detail. Take a quick look at this trend line, okay, this logarithmic trend line, and see if you notice anything about it. Let me start pointing things out to you, okay? This was the greatest crash in market history in terms of percentages in short period of time, the 1987 market crash. Okay. Now remember, it was suggested to me from Robert McHugh that using these two lines, the 20 high and the 18 high and going back, that indeed you would find out that we hit the crash low in 87. Well, I spun that around a little and worked from the crash low in 87, worked the way up. And he also pointed out that it also hits virtually exactly the October of '02 bottom in the market. Okay. Very important bottom in the market. So, first thing we notice is this trend line, the way it's set up. Remember, the original idea to set it up came from these two highs. Go back in time, and this trend line captured virtually exactly the lows of one of the great crashes in market history and one of the great declines in market history, October of '02. Okay, now follow it forward. This is the 2007 top and the 2009 bottom. But look what happened. We came down to the trend line, played around for several weeks here. And when we started to break below it, look what happened. I mean, again, crash-like activity. You can see how big a decline this is, or this was in time in '08, '09, by comparing it to this crash. These are logarithmic charts, and so these moves down correspond magnitude-wise to each other on the chart. It's not like a linear chart where if you move from 100 to 200, it's a 100% move. And if you go from 1,000 to 2,000, it's a 1,000-point move, and they're both the same. They certainly wouldn't look the same on a linear chart, but they would look the same on a log chart. So that's how great a decline this was. Once this line was broken in '08. And then what happened? Well, this is what happened. An attempt to get back year after year, week after week, year after year, to get back to this line. And finally, January of '18, got back to the line. I don't know if you remember this decline in 2018, but it was a pretty dramatic decline. After hitting the line, getting back above, going into September of '18, getting up very close to the line again, then another big move down. And finally, the move into 2020. This is February of 2020, okay? And what happened from there? Well, simply the largest percentage decline from an all-time high in the shortest period of time in history. Go and check it. I did. I checked it at the time. From an all-time high, the largest percentage decline in history in such a short period of time. So you would think at that point, well, okay, finally it's all over. I mean, we keep getting up to this line coming down, up to the line coming down. No, wasn't over yet. Watch this. Got up to the line again and fell back. This is August of 2020. Fell back here and then boom. Got convincingly above the line at the end of 2020 and then saw this great rally, 20-30% rally into the end of 2021, the beginning of 22, that I would declare was the final blow off to one of the great bubbles and great adventures in market history, okay? And then let's see what happened. Well, what happened is this. You got down to the line, you broke below it immediately when you got back to it. Then you rallied back up to it, and you had this big decline. This is August 16th of 2022 right here. And this is a 20% decline right here, okay? In about 8 weeks. Huge decline. But it wasn't over yet. Look what happens. So this one overshot the line a little bit and then had this really big decline. And now we went up a little back, up a little back, and then up, 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 up to the line exactly. Virtually exactly. When I say exactly, 44.27 rounded off. The high that week was 44.44. 17 points difference. What's 17 divided by 43.29? Like 0.4%. That's how exacting it was up here, okay? So here's what I would maintain now, okay? There are no guarantees in the stock market, okay? What this is saying to me is if this was a bear market rally from the lows in October of last year to the current time zone, if it was a bear market rally, and I believe, I won't say with every fiber in me it was, but with most of the fibers in me, I believe it was, then it ends right here, okay? If you start getting convincingly above this line, then you're beyond any reasonable area for this rally to stop. And it would surprise me very much if we don't go to new all-time highs. But right now, no, this was a perfect place to stop, okay? Perfection. Take a picture of this, will you please? Show it to your friends. This is probably one of the most amazing trend lines I have ever seen long term in the market. Remember, this starts in 87. You're talking about a 36-year trend line with these incredible points. End of a crash, boom, huge rally. End of a big long-term crash, huge rally. Breaking here and causing a crash, and then coming up, trying to hit it, finally hit it, boom, 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 boom. Greatest decline from an all-time high in history, still not over with. Still the bubble continues. And here you go. You get this far above the line and finally break it again. And now, after breaking it, getting back to it and a little bit above it, breaking it again, coming into the October low, now you've slowly crawled your way back exactly to this rising trend line. Now, if this started here, and really that's where my suspicion of it started, from the 2018 high to the 2020 high. If it were only this long, you'd say, well, you don't have that much evidence. Yeah, I mean, that's good to see that happen. It would be a good place for it to stop because you're talking about logarithms on a longer term time basis. 2018 to the present time, you're talking 5 years, okay? So there would be reason to think it might stop it. But we're not talking 5 years here. This is 36 years. Take a picture of this. Show it to your friends, please, because this is incredible. Now, 3-4 weeks from now, when we're up here somewhere, you can look back and say, boy, Eliades did it again, man. He really led us astray again. Can that happen? Anything can happen in the market. Do you think it's going to happen? Do you think this line has any importance? Okay. So I spent a lot of time with this line. This is going to be a completely technical update. I'm not going to do my price projections because price projection wise, we have started to get downside projections. As I told my subscribers right up here when we hit this trend line, we would start to get downside projections and they could start to snowball to the downside. We have the beginning of that right now, but no snowball effect as yet. Okay. Before I leave you, one more chart. Showed it to you in the last YouTube update. I'm going to show it to you again. Okay, here it is. What are we looking at? Well, this is the NASDAQ 100, NDX, weekly chart. And I've got the Dow here. I got a very small scale for it because it's not that important. The only thing that makes it important is I'm relating the NASDAQ to the Dow. This is the speculative area of the market, the tech stocks, the artificial intelligence stocks, all that stuff, the bubble part of the market divided by the high caps, the conservative part of the market, the Dow Industrials, okay? So I showed this to you last time. Look at this. For 1 week in the year 2000, at the very peak of one of the greatest bubbles in market history, besides the current one, for 1 week, we were above this level of about 0.44. Ratio of, this is the NDX divided by the Dow, and this is the resulting fraction, okay? So that's 1 week we saw right here at the virtually the exact top before an 85, 88% decline, okay? When did we see that again? Well, we saw it for several weeks in late 2021 to very early 2022, right up here. I've got two vertical lines that show the only times we've gotten this high in the ratio after it occurred here, okay? That's right here. These weeks right in here, right at the top, okay? Well, we had a big decline in the NDX, and now we've had a big rally in the NDX, and guess what? See this little mark down here? That's above the 0.44 ratio again. In fact, the ratio, the week of the high, a couple of weeks ago, 0.44, okay? 0.44 ratio. Nowhere, I put all the rest of the data here below the chart because I wanted to emphasize how very, very seldom in this time zone from 1989 to the current time zone, period of 35 years, we have never seen as speculative a market based on NDX divided by Dow as we have now, except for here and here. Okay? So that's it. That's my update. You call the market from here. You tell me what you think is going to happen here. And again, I know there are a lot of you out there talking about, yeah, but you're not taking into consideration AI, Peter. Artificial intelligence is going to drive this market to heights that was never seen before in the history of man. And, I've heard it all, folks, okay? I've seen all the reasons. I've heard all the reasons. What I'm telling you is, based on what I showed you with those amazing trend lines, or right now, the amazing trend line from the 87 crash low, tied in with what you're looking at here, you call the market. You tell me what's going to happen. The beginning of a new bull market? Hey, shouldn't laugh, Peter. Perhaps stranger things have happened. I can't think of any. So you call the market. I'm going to leave it up to you. You tell me what's going to happen from here. You tell me if we're going to go crashing through. You tell me what's going to happen with this trend line, okay? You tell me where you think we are in relation to the market, valuation, bear market rally, or new bull market. What do you think? That's it, folks. Thanks for watching. We'll talk to you soon. Oh, before I sign off, I keep forgetting to do this, and everyone that makes YouTube videos does it. I would really appreciate commentary underneath that shows an interest in what we're showing you. And that's important to YouTube because if they see commentary, they know that people are interested in what you're presenting, okay? So I would appreciate that. I appreciate a thumbs up also. If you have a criticism, by all means, write it down. If it's valid, I'll read it. I'll take it to heart. But tell your stock market friends about this. This is so very important. Thank you for watching. We'll talk to you with our next update soon.